I want to start with a little bit about the environment we're in. We just had the Fed raise rates. Rates have been going up in Canada. Uh, it's pretty ugly in some parts of the real estate market, but you're probably going to tell me it's not as bad as some are saying. Michael, I want to start with you. Where should we be hiding, or should we be hiding, or should we be hiding in plain sight? What's safe right now in the real estate market?
I don't think there's any need to hide at all. One of the benefits of being considerably older than both of you is I lived through the interest rate escalation in the 70s and early 1980s. And compared to that, this is nothing. This is escalation on a relative basis. It is necessary because money became too cheap. But it is not particularly frightening. And the real estate industry is very well funded in Canada. And most of the organizations have used modest amounts of leverage and have fixed their interest cost for very long periods of time. So there's no need to hide. And frankly, there's no need to panic, although people are clearly panicking.
But Michael, just to follow up, just very briefly, there definitely are some sectors that are hurting. So what should we stay away from?
Well, I'm not even sure there are sectors that are hurting operationally. Office is doing very well operationally, even though it's not in favor. Retail is doing very well operationally. Industrial and multifamily residential are doing great. So operationally, people are in good shape.
Well, Brian, Colliers has a huge amount of data. We love Colliers data. We live by it when we cover real estate. What is your data telling you?
I mean, similar to what Michael was saying, I don't think there's anything to hide from. There are different asset classes which are certainly doing better right now. You know, given the macro forces behind them, industrial and multifamily residential have had a great couple of years. Lack of supply on the market being a huge driver, as well as forces like immigration and warehousing logistics being critical, especially in the e-commerce boom. Those are all things that are driving those asset classes into a sustainable future growth, as well as current state being high. And as Michael said, the other sectors, in terms of what the data is saying, in office, the occupancy, not whether or not vacancy, the occupancy, people being in the office is rising, even though it's not there yet. And obviously that's creating some confusion and concern on what the future is. But there are still plenty of the overall vacancy rates in the marketplace is nothing that is to be concerned about on a macro level in most of the markets. In fact, in some markets, most of the markets, it's below what you see in the US. So it's generally speaking, the data is showing that it's still pretty solid real estate trends, despite some blips with the interest rates.
Yeah, I find that a little bit hard to believe. I mean, I know return to office rates in Calgary are high, Brian, and also some other cities. And certainly, New York, we're hovering around 50% or so, lower maybe if you look at Castle, but rising. Here we have all kinds of incentives, buildings giving away tickets to NFL games or concerts or whatever, just to get people back into the office. Lots of food. Are office landlords, are they sort of in high gear here trying to get people back to the office? Because we know even at 70%, that still means 30%, unoccupied to some extent.
Well, I mean, part of that is there's a general level of people not being in the office on a normal situation, people traveling for business, people working remotely before the pandemic. So the offices weren't like they were overflowing with people 100%. We're certainly lower right now. I think until some of the market dynamics with the labor market being as short as it is, until some of that turns around, you're not going to see the acceleration of the return. There will be a tipping point, which is combination of incentives and really amenities more than incentives. The incentives are short-term things, but building up more amenities, and amenities both being perks within an office, but also the whole community around it, which Michael has a lot of experience with building those communities. that's ultimately a sustainable future that's going to drive more. And then you're going to hit that tipping point where more people are in the office than not. And then that further accelerates it because it becomes, again, more dynamic place to be. So are landlords trying to drive short term? Absolutely. But I think there's more sort of long-term investments that they're making to encourage people being back in.
And Michael, in those developments, what are some of the amenities that, what's working? What's particularly enticing for people right now? Because we know not all office space is equal.
Well, it's interesting and something that has been validated for us right through the pandemic and into the current, let's call it cyclical downturn, is amenities don't exist as much within buildings as within neighborhoods. And what we have found with our portfolios in Montreal, Toronto, Calgary, Vancouver, and elsewhere, it's the mixed-use, amenity-rich urban neighborhoods that provide a complex of amenities and provide diversity in the neighborhood. And that's what acts as a magnet for the men and women who populate the buildings we operate for knowledge-based organizations.
So
I
Michael,
think it's not sort of a little gimmick you have in your own building that is going to make any difference. It's the complex of amenities that you have within walking distance, basically in the neighborhood where your buildings are located. And that is clearly becoming more sought after by a broader spectrum of users in the marketplace. When people talk about amenities, no building is big enough to create a complex of amenities rich enough to attract anyone. Only neighborhoods can do that.
So what are some of the neighborhoods, Michael, where you're seeing that critical mass?
A great example is King and Spadina in Toronto, the St. Lawrence Market in Toronto. Our restaurants were able to open up and operate in full capacity immediately, because even though the office buildings weren't fully repopulated, there were people living in the neighborhoods. So restaurants are hugely important. Fitness facilities are hugely important. They don't have to be in the building. They just need to be in the neighborhood. Merchandisers are hugely compelling, and on and on and on to ever more sort of intricate service provision, medical, wellness related. So it's kind of a neighborhood that is really drawing people. And that is very different from sitting in your home, wherever it happens to be. And that is what has always drawn people to our assets, and what draws people to other office buildings within the neighborhoods within which we operate. And of course, they're all urban. And this is something you can achieve in an urban neighborhood that is very difficult to achieve in a suburban neighborhood or a different kind of environment. That to me is the big draw.
Right. I live in a small town, and the library is the de facto town square. It's where everybody hangs out. Retired people, young people, everybody. They bring their coffee, their art shows. I know what you mean. And what about residential real estate? We had this data out this week. It was pretty grim, showing drops in residential prices and across Canada, although it's region by region, small drop. But is that part of a trend? I mean, borrowing costs are going up, and you know what that does to asking prices or selling prices.
Yeah, no, that's always going to impact it. But generally speaking, across Canada, and there's a lot of commentators that have spoken at length about this, there is a shortage of housing, particularly in some of our major areas like Vancouver and Toronto. And that is causing ultimately, what's the long-term impact on housing going to be? There's still going to be a shortage, which drives up pricing. And so whereas we see some impact right now, the trends on multifamily rental rates, there's a direction it's headed, and it's not headed in the the direction downward, which is tough on people and from an affordability standpoint. And there's a multivariable reason for that delay. A lot of it we're shooting ourselves in the foot with some of the development charges that our municipalities are putting on there, the burdens we're putting on there, et cetera. So until we solve that shortage, I don't think that we're going to have a sustained dip in terms of the residential marketplace. Because
Brian, talk to me a little bit more about that affordability issue, particularly when it comes to maybe the political environment or the environment for builders, accessory dwelling units, anything else that you might see sort of clearing the path either for multifamily or for more affordable units, anything really that could help in that direction. Because as you mentioned, the demand for rentals and for multifamily is super strong.
Yeah, to sum it up, it takes too long and it's too expensive to get places in there, whether it's the zoning process and all the burdens that get put. You hear the word NIMBY, the not in my backyard. We need more housing, just not here. And so, and you end up also with a very sort of binary, either you get a tower or you have a single family home. And there's a lot of stuff in between that could be done, but we have too many different municipalities. There's not enough staff. They're overworked, and the charges are high. You combine those things together with some we think unfortunate policy that is maybe well intentioned but not really done well, like inclusionary zoning, and you end up with a situation where just developers are having a hard time making it pencil. Plus, you add in the interest rates increases, which further compound this.
Right, because buyers are impacted and developers are also impacted. So it's double whammy in the real estate market.
It has to be profitable for someone to invest in, and that supply will drive down prices in the end.
Michael, where geographically do you think some of the more exciting multifamily housing is going to go up?
Geographically within the context of a city or geographically within the context of Canada?
Across the country.
Well, it's interesting. There is a lot of multifamily residential development in Montreal. It is overdue. It is flowing directly from the fact that Montreal is becoming a very successful city for knowledge-based organizations because of the number of men and women educated in the urban core of that city every year. It's somewhere between 250,000 and 315,000, depending on which institutions of higher learning you include. So there's very interesting things going on in Montreal. Toronto will continue to see successful development. There is soft densification going on in Toronto, which I think is a very good way of creating additional supply, which I think will help ultimately in terms of affordability. There is a lot of multifamily residential being created here that was started 2 or 3 or 4 years ago. It will be very successful. I am hopeful that what Brian alludes to doesn't suppress additional development of multifamily residential, because I think it's very important to the city. It's very important to my business indirectly. And it is a way in which we can begin to address the affordability issue. Vancouver is always operating at hyperscale. And there's a lot of very interesting things going on there, both in the condominium segment of the market and multifamily res. So in my view, there's a lot going on across the country. There may be some dampening of creation because of interest rates, because of maybe inappropriate behavior on the part of municipalities. But I think Canada will continue to propel forward there because there's a deep need. Our populations are growing, and we do have to find dignified ways of creating living space.
Brian, you look like you have something to say about this as well.
Well, it just ties back to what Michael was saying before about what we call placemaking. So you create these nodes, these communities, these places, and a lot of it is related to transit oriented. So you create these transit oriented retail, multifamily, and within walking distance and easy transport distance office communities, that continues to draw in people. And that's where a lot of investment is going to be going, is creating those neighborhoods where they're now currently not highest and best use, as well as intensifying and densifying in those areas and transitioning malls and reimagining what retail should look like. That's where the future is going. That's where a lot of investment is going. And that's going to transform fundamentally what a lot of the cities in Canada are going to look like for the positive.
So we have just a couple minutes left for each of you. Adam Newman, WeWork founder, is starting this new chain of apartment buildings. He's buying up buildings. The idea is to make millennials feel like they belong to a community and maybe tie in some crypto element. It's not clear if you'll get a token as part of your membership and then you're in that particular crypto community or what. But a lot of gimmicky things going on. But when you look at your data, Brian, I'll start with you. What is like the surefire, most exciting place going forward to put your money in when it comes to real estate, residential or commercial? If I were talking about Boston, for example, I'd say biotech space.
Got it.
In Canada, what is it?
So I won't comment on the residential broadly, like the single family. I'll focus more on the commercial. Well, the first thing is, I think trying to go for gimmicky, and I'm not sure if the new venture is a gimmick or not, if it's a legitimate one, but I think there will be a lot of fancy ideas that may come out. We'll focus on innovative, not gimmicky. That's something good. But I think really it's hard to pin down one particular asset class that's sort of the silver bullet, because as much as we've said on this chat that industrial and multi-res are really hot in demand, it means everybody wants it. And there's not much supply there. So it's not easy to just say, oh, I'm going to go in there. Wonderful opportunities to be opportunistic in office and retail. I think if I had to summarize, finding an area where those communities are, where you can be part of a place, be part of that, that's really, you can get in on that. And it may take a multi-year investment. That is a real future growth area for all different types of the asset classes. And that's where we're going to see communities thrive. So in my opinion, finding those opportunities, short of other specific things in targeted asset classes, that's really, I think, a long-term investment angle.
And Michael, I need to make money. It needs to be a surefire thing, but it's got to be exciting. Where should I put my money?
Well, for sure, in my opinion, it has to be in something you know how to operate. So frankly, there is no trading perfect asset class. Industrial's sought after, it's expensive, it could be overbought. Multifamily could be overbought. Office is actually not in favor. Maybe that represents opportunity. But the answer I would give is you should only be investing in something you know how to operate. That is the only way to extract value consistently, reliably, and safely. So, and some people do it really well in industrial, some people do it really well in office, some people do it really
I was gonna give my money to you, so then how would you answer that question personally?
Well, I would say undoubtedly buy Allied stock. I mean, it is on offer at a very low price in relation to the underlying value of our assets. And we know how to extract value from the office portfolio that we own across the country. But again, that's what we do. Private equity is a different and very interesting activity. There you have brilliant traders trying to bet on sectors at the right point in time. And that's a very valid activity too. So if you want to trade, you take a private equity perspective. I would say now they're concentrating on industrial and multifamily. If you want to operate, I think you find any sector going with a really good operator and you're going to be well served.